So last time we talked about how to learn from your customers in order to get them to tell you what they want and need. But your product or service will rarely exist in isolation. So you need to understand the market and the competitors. So in this short series, I'm going to talk about the market, your competitors, and positioning. So why study the market? You're aiming to size the potential and be precise about the opportunity that you have. So you need to do those because it's critical for the business case, which is working out your return on your investment. And it's also critical for R&D and manufacturing to understand the job that you're asking them to do, because building one of something is very different from making millions a year. So to do that, what you need is market sales data. Fortunately, that exists from many industry organizations for free, or also data companies have this information, although you probably need to pay to get it as precise as what you need. So I'm going to introduce you to a gentleman called Sun Tzu. 2,500 years ago, he wrote a famous book, document, called The Art of War in ancient China. And it's got many interesting statements and that are still useful today in warfare, but also for business, and particularly for relating to the competition. So the first of those are victory belongs to the side that scores the most in the calculations before battle. And prior information enables wise rulers and worthy generals to move and conquer, bringing them success. So that gives you an idea. 2,500 years ago, Sun Tzu already knew that it would be important to make the study before you do anything, and that's still true today in war and business. So the first step in sizing your market is understanding what we call a TIV. So that's the overall market size. So for example, if we were talking about passenger cars in Europe, the passenger car total market in Europe is over 10 million cars. But if you look at how that breaks down, for example, 70% of that is just 5 countries. If you want to gain another 10% to get to 80%, then that's 3 more countries. If you want to gain another 10% to get to 90%, that's 5 more countries. And if you want to get that last 10%, that's 17 more countries. Generally, every country you do has an additional cost related to it. So it's important to get a picture of the overall size of the overall market and then how that breaks down. And that overall market is what we call a TIV, which is total industry volume. So the next step is to look at a breakdown of that market. How does that break down? So there's many ways you can subdivide your markets normally, but you want to figure out where you want to focus. So for example, it might cost you significantly more to do all the possible combinations, or take a lot longer. So you need to know what to prioritize. So for example, again, if we look at passenger cars, you might realize that the global passenger car market for right-hand drive is less than 14%. So maybe you only want to make left-hand drive cars, and many companies have done that in the past. Then you want to look at the trend over time. So we talked about this before in terms of data. It's very important to understand how things change over time, but particularly for markets, you understand if it's a growth market or a shrinking market. So here, of course, we can look at the absolute numbers, which is the volume, but often that's quite difficult to understand because there's macroeconomic trends, societal trends, things happening that you can't understand. So what's interesting is to look at each subdivision of that as a proportion of the total. So that's market share as a percentage. And then if you look at that in this situation, you'd see, Germany is not only the biggest market, but it's also growing the fastest in the recent term. So that's a good sign. Then you need to consider the price impact. So particularly the price volume relationship. So you will be selling a product or service, and it will be at a price point or a range of price points. And you need to figure out which of those you're going to target. So one useful tool for doing that is a bubble chart. A bubble chart shows you price and volume by competitor, by model, by some whatever you want to divide it by, but it shows you these kind of vertical trees, which are very, very useful to understand. Here's a price point, but maybe there's a lot of volume, but maybe the price point is too low for you to make money at. So that's important to understand how you're going to cover that. And with all of that information, then you need to consider accessibility, because that whole market isn't yours. All things being equal, customers tend to buy what they know and trust. So that means they tend to go back to things that are familiar. So if you go supermarket shopping, most of the time you go on the supermarket, your brain is kind of switched off and you're just picking up the things that you normally pick up. And it's exactly the same with most products. So for example, around 30% of new car buyers always buy from the same brand or the same dealer. So your chance of winning those customers is extremely low unless you have a super compelling offer. Similarly, car companies put a lot of effort into the way that the cars drive, the way they handle, accelerate, the way they sound, but actually only about 50% of new car buyers take a test drive. So they don't learn about all of those things until after they've bought the car. So your accessibility is quite important. You need to be careful to play to your strengths. So for example, one thing that's very common is that people tend to buy nationalistically. So of course, Germans buy more German cars, the French buy more French cars, and this sort of thing. So again, it's not that you can't win those customers if you don't have a brand from that country, but it's more difficult. You're fighting against something. And also you need to consider your offering. So are you selling all the possible combinations? We talked about how that maybe that's too expensive for you to develop. So what portion of the market are you able to cover? And then you need to consider about the purchase funnel. So how do customers arrive to decide to buy your product? So if you think at the top of the purchase funnel is 100% of the market is open, but then what's the awareness? How many people actually know about your product or your service or your brand? Even the best known brands still aren't usually 100%. Then what's the people's opinion of your brand or your product? And here it can be up to 50%. It's a huge amount, it can be reduced. Then if they don't have a good opinion about you, they're not going to proceed any further. If they do proceed, then maybe you make it onto a short list. Maybe you don't. Maybe there's other reasons why your product or service isn't attractive. And then once you've made it into the short list, you've got to beat out all the competition. And so when you get down to the bottom, there can be a tiny percent that actually is accessible to you. And like I said, you can have a fantastic offering and you can overcome a lot of these things, but you have to be aware, be reasonable about what's possible. So after you get to all of that, what you get to is your potential sales volume. So we've gone through these. You know, maybe you decide not to sell in the more difficult countries. Maybe you decide not to sell at a low price point. Maybe you decide not to develop all of the possible combinations, and then you lose some through the purchase funnel, and then you end up with 8 or 10% at the end. A couple of care points. It's very easy to deep dive into the analysis with a lot of data. You should try and avoid doing that. It can be a waste of time. You want to get in just enough information that you can be confident in your decision. And the reason why that can be a waste of time is, as they say in the stock market, past performance is no guarantee of future results. So just because something is like it is today or like it has been in the past, doesn't mean it's going to be like that in the future. You just want confidence enough that you got the right direction. So in the next video, we're going to be talking about your competitors. Thanks.